Hi folks, Lee Gettess here with the Market Sense for the week of May 27th, 2014. The charts we'll be looking at come from the Trade Navigator software. And looking at a weekly bond market chart here, we've got Monday on Tuesday this week, so we don't have a whole lot of data, and the week has just been inside of the previous week. But of course, that week was inside of the week before that. It was a shortened holiday week, though. All in all, I think the market is really behaving very healthy. It's holding this middle moving average all the way up here and still looks relatively strong. That moving average, by the way, this week is around 136.20. It leads the initial target here, the possible resistance in the mid 137 area. Let's call it 137.16. But they sure look like they could go take out this 138.04 high and just keep going. I don't really know how high they could go. By the same token, were they to break down here to the 135.20 area in the lower moving average, that'll still look pretty good. They'd still look like in a relatively well-defined uptrend for the year, and I think that's the way you have to look at them. The trend is up until further notice, and we have no further notice yet. Now, stocks are in a little different situation. They've kind of sort of been sideways with a slight upward bias for the majority of the year, really. And they've opened higher and gone to new all-time highs here, and this has got to be the most unenthusiastic new all-time highs I've ever seen. Usually a market making new highs will either encourage a bunch of buyers to come in for fear they'll miss it, or get a bunch of people slamming it back down because they think they've gotten too high. And in this case, we have neither. Last week was basically the lowest volume for the entire year. Boy, if that's ever happened before as the market's making new all-time highs, I really don't recall it. It's just very unusual to have volume this low and be at new all-time highs. The best support for this week is actually all the way down at 1878, and they don't look like they're inclined to go down there at all. We do have a projected higher at 1909, which is what they ran into Tuesday. But I don't see anything to stop this market from going up to the upper Keltner band at 1925 or higher. And, as a general rule, it's just not a good idea to argue with a market that's making new highs. Were they to break all the way down to, what is this, 1860 down here at the lower moving average? I mean, that wouldn't be doing any damage. They'd still look pretty good. But with them opening and going to new highs, I think this probably means they've got a ways further to go. I think they might go higher well into the summer now. I can't tell you why. I don't see a lot of fundamental reasons for them, but doesn't matter. That's what it looks like. I really thought they were making a high in here and we'd get the sell in May and go away deal. Doesn't look like that's the case. I think they might continue higher. Of course, if they turn down hard on Wednesday, then I'll change my mind. That's the way trading works. So that's what we've got for you today. I hope you can find something profitable to get yourself involved with. Thanks for checking in to see how we're looking at things.